Thank you very much for rejoining the Ecobank Virtual Trade Conference. And now we are going to have a panel discussion on the challenges and opportunities of Intra Africa trade. I'm delighted today that we have four eminent panelists to join our discussions. We have Tayo Omidiji, Head of Strategic Planning at the Nigeria Export-Import Bank. We have Yusuf Malanta Ibrahim, Comptroller at the Nigeria Customs Service. And then we have two Ecobankers, Mr. Akin Dada, Group Head of Corporate Bank, and Gwen Abunaw, Managing Director for Ecobank Cameroon. So thank you very much, all of you, for joining us for the discussion today. Intra-Africa trade is what we are discussing today. There are numerous barriers to growth, but several of them really stand out. We have infrastructure, we have currency, and we have customs administration. And I'd like to look at each of those in turn through the panel. So maybe if we can start with infrastructure, and we'll start with you, Gwen. The inadequacy of port, road, and border infrastructure is a major constraint on regional trade. How serious is the perspective from your region, the CEMAC zone?
Thank you, Ted, for giving me the floor. I believe that inadequate infrastructure within most African countries is a problem, but more so inadequate infrastructure connectivity between the countries is even more of a problem. If you look at the railways, the roads, the airports, the seaports, energy, water, they are all inadequate in port supply and they are not being maintained. If I take the case of Cameroon, that has a very strategic location in Central Africa because we support two landlocked countries, Chad and the Central African Republic, for all their imports into their country, as well as those around us that have access to ports but need us for goods and services, like Gabon, Congo, Brazzaville, and Equatorial Guinea. But because of the infrastructure issues that we have, movement of goods and people is very difficult. It allows border controls to use unorthodox methods to collect fees. It creates cost inefficiencies for those who are trading because, according to them, in addition to the normal costs that they have to face for their business, they have to put into place other costs that are not related to what they are actually doing. Now, if you go further and you see those business owners who want to develop their business, they are forced to invest in road access to their factories. They have to buy electrical generators to be able to have power supply. They have to do boreholes to be able to have access to water. This makes them very uncompetitive, and it does not foster intertrade between the countries. You would assume that because you can leave Cameroon and go into Nigeria from the southwest, from the northwest, and from the north, we should have more trade than what we are seeing now. But because most of this is illicit because of the lack of information, the fact that customs are not, if I can call it, modernized, and the fact that even the trade in terms of the currency exchange is a problem, all of this hampers what kind of business and what kind of trade can be done. And at the back of this is all due to poor infrastructure. What is key is that, yes, all the governments have agreed on regional integration. They have signed all of the agreements, but then political will now has to back the initiatives that are needed to be able to develop the infrastructure that is required to foster intertrade. So I'll stop here for now.
Thank you very much, Gwen. To Akin now as well. Akin, from the perspective of West Africa, how serious is the infrastructure deficit? What kind of blockage is it to doing pan-regional trade?
Thank you, Ted, for that question. I think, the question on infrastructure, I would like to place this in the non-tariff barrier bucket when we're talking about intra-Africa trade. An UNCTAD study had said that the non-tariff barriers adds about 200 and something percent to the tariff, which is essentially an increase in transaction cost. So when we look at the non-tariff barriers, you have energy cost, the custom administration, and then you now look at transportation. Essentially, the cost to export is highest in the sub-Saharan Africa than any other part of the globe. Essentially, if I look at West Africa, trade and movement is predominantly road. While there are differential in terms of the road network and the quality of the roads between and among the countries, one of the few things that you see is that there is no what I would call standardized infrastructure across the boundaries. There was a World Bank study sometime in 2011 that showed that transportation by road is slower. It takes about 1.6 kilometers per hour. And they did a study that if you're moving by a car from Niamey to Cotonou, it takes you 18 hours. That's a passenger car. So if you use a truck laden with goods, you might want to multiply that by 1.5 times 2. So one of the critical infrastructure that I see that we haven't developed, at least in the West Africa region, is rail. It moves larger and faster. Whereas ECOWAS has this ECOWAS Rail Transportation Initiative, which had started sometime in 2014, that hasn't developed much, and that is an opportunity to actually reduce the cost and have more goods moving amongst the countries in West Africa. As long as we continue to depend for most of the movements of goods on the road infrastructure, then the cost will continue to be high, and the capacity or the ability to develop the rail infrastructure, I think, personally, will be an added advantage across the countries. Thank you.
Thank you, Akin. I wonder if I could turn to Tayo as well. From your perspective at the Nigeria Export-Import Bank, and also for landlocked countries, where do you see this difficulty of infrastructure deficit?
Okay, thank you, Ted. Just like other speakers, have mentioned, the issue of transport and logistics infrastructure is really very quite critical, and we need to address this if we want to boost intra-African trade. Now, a number of countries are landlocked, but all the same, there are countries that are coastal too. But because there is no link by sea, and the rail system is not quite developed, most of the trade takes place by road. But then, because of the poor road connectivity, issues of bad road, and all of that, and when you add also the problem of multiple checkpoints, multiplicity of security agencies, this adds to the cost and time. So under this condition, you can't really not promote trade. Now, somebody once, gave an analysis, one of our clients, that, he was importing, some raw materials from Germany, for a 40-feet, container, from Germany to Lagos, cost just about $1,000. But for the same container to, transport goods from Lagos to Ghana, cost about $1,600. So these are some of the reasons why trading within Africa is uncompetitive, and we need to address this. Now, moving into what NEXIM is doing, this is why NEXIM is working on a regional shipping project. Just like other parts of the world, globally, if you check, over 90% of trade is done by sea. And I think Africa needs to also get there. Now, currently, we are really not able to trade, by sea because of lack of indigenous, ship within the African continent. Right now, if you want to move your goods by sea, you have to do it through foreign vessels, which you first of all go to their countries first before, coming back to a location in Africa, which again adds to the cost and time, which is why NEXIM is working with other private sector agencies to introduce the Sea-Link project. The Sea-Link is a regional shipping company, promoted under a public-private partnership model, whereby shipping services will be, offered, within starting from West and Central Africa first, before maybe expanding to other African countries. Now, currently, we have a consortium of private sector operators who have agreed to supply like 20 ships, for the operation of this company to start. We are also in partnership with other, government agencies like the Nigerian Inland Waterways Authority, the Nigerian Navy, because the idea also is for Sea-Link to also support hinterland trade, for movement of bulk cargo, such as solid minerals, via barges. So this way we can, increase our exports of not only agricultural commodities, but even solid minerals, which we have in large commercial quantities, but we've not been able to leverage on this opportunity because of the issue of infrastructure constraints, particularly transport infrastructure. Thank you very much.
That's great. And maybe if I could also have the views of Yusuf in terms of what else would you like to add on this question of the deficit in infrastructure blocking trade? I'd like to look at another of the questions and another of the real issues when it comes to blockages, and that is currency. The need to transact across borders usually requires US dollars or euros, and there's obviously not enough of them to go around, huge shortages. So I'd be interested to know what kind of solutions are available for local currency settlement across border, and is the creation of a Pan-African currency a feasible alternative to the US dollar and euro? Maybe Akin, if you could start by answering that question.
Hello?
Thank you very much, Ted. I think the question about currency is a very important one in both our current configuration in Africa and in our ability to improve intra-Africa trade. As we speak today, there are probably two solutions to the issue of currency. One is a solution which was developed by Afrexim. It's called the Pan-African Settlement System, which thrives on settlement in local currency. And the second one is the Ecobank solution, which also drives the same. But I will try and speak to both to tell us where the development of these two solutions are at the moment. In the long term, I do believe this is going to be a two-step approach, and that long term is about the conversation around an African currency, just like you have the euro. But this is time impact, and I believe that will be the ultimate solution to the issue of currency. But today, Afrexim has put together a settlement system which is being tested in Sierra Leone and in Liberia, and is ready for a rollout. But from an Ecobank perspective, Ecobank already has a switch solution, which is currently sitting in 33 countries in Africa, and which is operating outside the SWIFT network, which means if you are importing something, or you are a seller, you are sitting in Lagos and you are selling to somebody in South Sudan, the Ecobank switch is able to settle your transactions in your local currency instantly, just like you're doing an NIP transaction between Lagos and another country, state in Nigeria. So that will be what I will call an intermediary solution that allows trading between countries on the continent in Africa today until we come to the spot where we have a proper customs union and a currency itself to boot. But there are solutions today which are available for use. Thank you.
That's great. Thank you, Akin. In fact, maybe we can get onto those solutions a bit later. Maybe if I can move to Tayo now, I'd be interested to get your views on this question of, cross-border settlement. Is it feasible to have a Pan-African currency?
Yes, I think it's feasible, but like Akin said, in the interim, we have this initiative being promoted by Afreximbank, which is the Pan-African Payment and Settlement System. The whole idea is to facilitate payments, for cross-border trade in African currencies, thereby saving the continent, billions of dollars in transfer charges. I think this initiative will also help to promote, formal trade, and also provide alternative, to the costly and lengthy correspondent banking relationship. So I think in the interim, because I'm aware that Afrexim is ready with this project, it is likely to go live before the end of the year. So that will, help in the interim, pending when we can have a common African currency, which I think will not be very soon. The initiative to have even one for ECOWAS, which has been on for quite some time now, has not been live. But in the interim, we can make do with some of this initiative by Ecobank and Afrexim. Thank you.
Thank you very much indeed. Are you able to hear us? Are you there, Yusuf?
Yeah.
Sorry, yes, I'm glad we got you now. I just wonder, yes, if you could give your comments on infrastructure and currency. Thank you very much.
Thank you very much. I just want to start by making it very clear the role of the Nigerian Customs Service when it comes to trade and trade in goods and services. Nigerian Customs Service is saddled with the responsibility of supervising the movement of goods and services in and across the border. A lot of speakers have talked about transportation, infrastructure, non-tariff barriers, and all this. But the most important thing about all this is compliance with the Eastern Guide. We can go to any kind of trade in this world, but the most important thing, we have to have a sincerity of purpose. If there's a sincerity of purpose, then we can now know that we are working in group. So what I'm trying to say here is that ours is to make sure that the Eastern Guide is strictly complied to and adhered to. So in terms of infrastructure, it's very important that infrastructure is one of the key in the movement of goods and service from one point to another. And not only movement, but simplification of that movement. Because we talk about digitalization. We cannot just continue going in a manual way of doing things and expect things to go right. We have the corridor. We need to have to automate these procedures so as to minimize all these biases coming in. So my contribution here is, in terms of infrastructure, we really need to work hard. We need to be our brothers keepers. We really need to ensure that protocols of the ECOWAS and the protocols of the EFTA is strictly adhered to, so that movement from one point to another will be supervised by all the customs territories within that corridor. So that's my contribution in infrastructure.
That's great. Thank you very much, Yusuf. Glad to have you back in the conversation. So I'd like to now, if I could turn to Gwen. Given that we have these constraints which are out there and they're quite enormous, what financial tools are available to help clients manage a cross-border trade in Africa? Maybe you could give the perspective from Central.
Okay, thank you very much for the question. I think our group CEO in the beginning recounted our vision and mission as Ecobank, which is to participate in the financial integration of our African economies. And with that backdrop, I believe that is what we have as product and service offerings. With our unique platform, we are able to assist our customers in the usual trade transactions, be it letters of credit, bill collections, and what have you. We do traditional transfers, but we have also offered a whole range of digital products and tools that enables them to be able to initiate these payments from wherever they are. Another key feature using our mobile application is the cashless transfer. So for small and medium-sized traders who have to move funds when they are traveling by road most of the time, they are able to use our rapid transfer service either online or within our branches. This gives them a whole range of products and services that they can use to conduct trade between the countries and with their clients. Another thing is we have catered for various products to match the different segments that we have within the bank. So you have for the medium and small enterprises, but you also have our Omni platform for our corporate clients. We are able to provide insights to them about different currencies through our EBI Paris, through their African desk. And our FICC team, or our treasury team, for those who are not within the bank, our treasury team actually provides solutions and options to them on how to hedge for those who are doing foreign currency transactions and what kind of forward options they have in making payments at a later date. We equally play a very big role in terms of advisory, because what we lack most of the time is access to information. And for some smaller players, they don't always have a supplier or somebody on the other side that can give them the advice they need to be able to carry out trade within the right measures and terms to make sure that they are profitable. So we equally provide a lot of advisory services to our clients who are trading within the African countries and also externally when they are exporting out of Africa into the different global economies. So at Ecobank, I think we have a wide variety of unique products, and we also have a unique platform that enables us to support the Pan-African trade within the continent and externally.
That's great. Thank you very much. Akin, is there anything you want to add to that from your own perspective in Nigeria?
Thank you very much, Ted. I think if you look at Ecobank, we're currently uniquely placed, just like Ade, our group CEO, mentioned. And there are three things I generally look at, in a trade situation, especially in Intra Africa. Number one is the trade instrument itself. The second one is the payment. And the third one is the collection of when you sell, you are able to collect your receivables. We do have, as Gwen said, a variety of instruments which she'd already mentioned. But in addition to that, in the trade instrument space, is that we have the capacity as Ecobank to create access to market. Imagine you sitting in Lagos and you want to export to 32 countries. Ecobank can give you information about 32 other countries that you don't have, and can at the same time create and link you up to the other side of the fence that you probably do not have an inkling about. Maybe you want to go to Mozambique, or you are trying to sell to somebody in Malawi. So that is one significant role that, as an African institution, we're able to play between 2 points in the continent. Secondly, we do have currently today, like I mentioned, a payment solution that is instant, that allows you, using our Omni Plus application, to actually make an instant payment. For example, you're buying goods between yourself and you sit in Lome, or you're buying in Lagos. That allows you at the same time to settle in your local currency and not have to pay through US dollars or euro. So that capability is currently available and is also instant. When it comes to your collections, because part of the challenges that intra-African traders do have is, I'm selling in another country, how do I get paid? And this is where some of our electronic tools come into play. We have the Ecobank Pay, which is a QR code, which today is actually working. And you can see this between traders in the ECOWAS zone who are actively using the acquisition tool to actually make payment and collect when their customers actually sell in another country. So all of this put together is why, as an African institution, Ecobank provides or sits as an important, what I would call facilitator of movement of payments and in the trade instruments in the new Intra Africa conversation we're currently having. It just so happens that we have the largest footprint and the largest connection, to different parts of the continent that allows us to do all of this. Thank you.
Thank you very much, Akin. Maybe if I could go to you, Tayo, as well. We don't have much time, but could you just quickly tell us about factoring? Because I do understand that's something that Nexim is developing and really has great potential for the commodity value chain.
Yes, thank you, Ted. Now, in the course of the session, we've talked about the preponderance of informal trade, particularly amongst SMEs. This problem is also related to the problem of access to finance. So, therefore, as part of measures to promote formal trade and also promote financial inclusion among SMEs, Nexim, in collaboration with partners, including Afrexim and the Factor Chain International, is promoting the development of factoring as a financial, an additional trade finance instrument in Nigeria. As you know, these SMEs typically have difficulties, in borrowing from the banking system for reasons of lack of collateral, amongst others. So what factoring does is to enable them to sell their receivables, to a financing company called a factor, thereby raising working capital to continue in business pending when payment is made. So it's a project we commenced some few years ago. We have developed a draft model law, which is currently with the National Assembly to pass. By the time this product is fully developed, I think it will help to address some of the problems of access to finance by SMEs.
That's great. Thank you very much. Yeah. I'm afraid we're rather short. We'd like to bring in one question which has been raised by one of the delegates, John. It says, I think while promoting trade across Africa, we should also take cognizance of protecting indigenous companies from going into extinction due to the influx of similar and competitive goods from other African countries. So I wonder if maybe Yusuf, from the perspective of customs and the customs service, what could you say in response to this question? What kind of protections will there be for domestic industries not to be deluged by competition?
Yeah, thank you very much. One of the protection we have here is this, what is called rule of origin, whereby there's going to be substantial transmission from the import of that country to another country. Let me give you some example. Some times ago, we have some influx of tomato paste coming to Ghana. And when it comes to Ghana, it will be repackaged and comes to Nigeria as an ECOWAS product, which by application is not supposed to be the only value addition in that process is only packaging. So what we are talking about is the origin of the country determines the classification of that product. So if the substantial transformation is not up to 30% or 75%, then definitely it depends on what kind of value addition you put on that process. So that protection is there, and the local industries are fully protected. And even that, there's an excise duty imposed on the importation of that, so that apart from paying the normal CISS and ETLS, there's an excise duty so that infant industry will now grow up and compete amicably with the other enterprises.
That's great. Thank you very much indeed, Yusuf. I'm very sorry to my other panelists to say I'm afraid that we've run out of time. I'm sure we could have discussed many more things, but we do need to move on so we can finish on time. So I would like to thank my panelists, Tayo, Yusuf, Akin and Gwen, for a very interesting conversation indeed. And we're now going to move on to the second section of today's trade conference.